Hello, today is Monday, April 21st, 2025, and I am Jason Shapiro with the Crowded Market Report.com. So today, clearly not a very good day for U.S. financial assets. We had stocks down, we had bonds down, and we had the dollar down, which I talk about a lot as being a possible sign, and it's done this quite a number of days this year, more than I would say ever, which obviously indicates, liquidation of U.S. assets. And this all kind of started last night when the Trump administration over the weekend was talking about that they were looking into ways to get rid of Jerome Powell. And, I don't even pretend to understand Donald Trump's thought process or his methods, whether he's using it as negotiating tactics or whether it's a bluff or whatever it is, but it doesn't seem to be working very well. This whole thing is a game of confidence, and every time he does these things, people lose more confidence, right? And in particular, a fiat currency, which is what the US dollar is since we went off the gold standard in the early 70s, needs to have confidence behind it, right? The US clearly has benefited from being the reserve currency, and that is slowly being chipped away. And U.S. assets get a higher premium in pricing because of that. And if they're going to chip away at that confidence, then they're going to chip away at the higher premium that U.S. assets get. And that's really, to me, what's going on here. So, if we look at the dollar in particular, this thing has really clearly come off a lot, right? And it doesn't help, we're at like multiple year low here, right? It didn't help that coming into this, people were very short, as you can see here, like Aussie, like in January, people were short all these things, the Aussie, right? The British, this was the shortest they were British for a long time. The Canadian dollar, they were short. The euro, they were short. And the Swiss, they were short. And so this is why positioning can be so important. It doesn't necessarily predict what's going to happen, but it means that when and if something does happen, there can be a big move because people are going from short and they have to get squeezed out of those shorts. And that has added to, fuel to this fire in the dollar move, I believe. And that's not over yet anywhere except for yen. And you can see that the yen has really been the weakest one. That's where people have been the longest. And they're even longer now. This is the longest that speculators have been in yen ever. So, I did try to short yen somewhere in here, and I was stopped out here when I went through the highs, and I'm waiting again to put that trade on when the market can confirm that, if and when the market confirms that. But again, this lack of confidence thing coupled with the huge position in the other way thing has really caused a big move in the dollar. So what happens when this happens? Well, clearly there's a flight to, I wouldn't call it a flight to safety. I would call it a flight to assets that can help protect you from the collapse of a fiat currency, the potential of a collapse in the fiat currency. And of course, that starts with gold. And gold ripped today, new highs today. And we are finding that to be true in Bitcoin as well now, right? Last week, I spoke about how Bitcoin was starting to at least outperform risk assets that it has been traditionally correlated to, like the nasdaq. And today, forget about outperform, it just went straight up. To me, that's a flight to anything that can protect you from fiat currency destruction, which is what's going on. So the proof is all in the tape that that's what people are thinking here. So we kind of, in my view, have an interesting thing going on here, in particular with stocks, and for that matter, bonds, but I'd say in particular with stocks. Stocks went today. You can see the NASDAQ ended up closing below where Trump announced his pullback on tariffs, which was here. The NASDAQ is now below that. It didn't take out new lows, but its pullback on tariffs was announced right about these levels, right? The S&Ps also closed below that. The Dow also closed below those levels. That is possible, dangerous areas. Because what are they going to do next? I know there's still some room for tariff pullbacks on China and whatnot, but you know, they pulled out a lot of the stops that day, and no pun intended. And we're now below that. That's not that great. And we're in this strange place where nobody really wants to try and short, particularly aggressively, because you can get caught in some kind of news event like we had that day, and getting caught in a move where the Dow goes up $3,500 in your face in 3 hours is not something anybody wants to do twice, right? So it's like people are scared to short, which I think is why, for example, today, we got the squeeze up into the close, right? Because nobody wants to be short overnight because you never know what they're going to say here. And the more the markets go down, the more pressure there is on the markets. Obviously, the higher the possibility is that they're going to come out and say something. And then you get this squeeze up and you get caught in it. So it's very scary to short. It's also very scary to short bonds because of that reason. It was really the bond market that forced that whole thing, pulling back the tariffs. And you could argue it was a bond put there. But, you know, again, we're testing those levels again here, right? And we had the Fed come out and say that they would support any kind of lack of liquidity, which is what we were seeing across a lot of the fixed income markets. Any kind of off-the-run treasury or municipals and stuff, we're really seeing a lack of liquidity there. And the Fed has said that they would support that. It seems like the market's trying to force that, you know, and what will happen should they come out and support it? And by support it means they're basically going to print money, right? They're going to provide liquidity. And what does that mean? If they provide liquidity, is it inflationary? Therefore, it's not even going to help bonds. We'll see if we get there. But, you know, it's a pretty scary place, you know. We'll see what the reaction is. The first reaction, clearly, you would think would be people would buy assets. But what if that doesn't work? And I've talked about this for a long time. I'm not saying it won't. I'm saying we watch the tape, we see how it reacts. And what if it doesn't work? We know that sentiment is horrible here. So we could be set up for a squeeze, but we haven't really seen positioning get so horrible. We've heard a lot of stories of dip buying. Last week, there was a lot of, I'm told, net buying in the stock market. We've been seeing retail buying stocks pretty aggressively on this whole way down. So is there the support to squeeze those shorts again? We'll find out if bonds keep going down, if liquidity keeps drying up. We will find out because they will come in and provide liquidity, and then we will see how the markets react. But it's a very interesting dynamic going on here. Like I say, because people are so hesitant to get short, therefore it makes it harder for a short squeeze to happen, right? But again, we'll have to just see and observe and watch. But as of now, you know, my big thing about down stocks, down bonds, down dollar happened again today. And that's just not good news. Can it turn around? Yes. But for now, it's just not a good sign, right? So anyway, those are my thoughts. And I wanted to say, like, on the gold thing, by the way, sure, gold went up, but the other metals didn't. This wasn't like a metal thing or a commodity thing. I mean, energy was down on the day, right? Crude was down over 2%, right? Copper was down on the day. Palladium was down on the day. Platinum was down on the day. Silver was up, but wasn't very convincing. But gold was up a lot. So this is not like a metal or commodity thing. This is a flight to things of protect me from fiat currencies, right? Now, as a contrarian, you start to look at it and say, okay, if that's what everybody's doing, we can look to go the other way and make a lot of money. Yeah, you can. And like I've said, particularly in the yen, I believe you can do that. But you're not just going to fight it. You're not going to fight new highs. I always say don't sell new highs, don't buy new lows. You're not just going to fight it, right? You have to wait for the market to confirm it. Let there be a piece of positive news come out for the yen and let the yen fail on that. That's kind of how I do it. So anyway, those are the thoughts. I hope that helps. Hope everybody's doing okay out there. And we will talk again tomorrow. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.